Repco Home Finance earnings for Q1 fiscal year 2026 are finally here. So let's check out some of these earnings. So first we have the disbursements and the sanctions. The red ones are the disbursements, the blue ones are the sanctions. Sanctions are the total number of loan approvals, while disbursements are the actual funds transferred, given out as loan, the actual money given out as loan. So disbursements, uh, all this is in millions. So 8,289 million rupees disbursements in this quarter as compared to 6,804 million in disbursements in the first quarter last year or 12 months back. So a big growth in disbursements we can see. Moving on, we have key indicators, key financial indicators. So sanctions grew by 25%. Disbursements grew by 22% year on year. Net interest income, very important parameter, grew by 9%. Operating revenue grew by 7%. Profit before tax grew by 7%, but profit after tax grew by a very small 2%. So they had to pay more in taxes and specifically more in deferred taxes. But we will look into it later in the video. So only 2% growth in profit after tax, despite like a 9% growth in net interest income. Then we have the portfolio composition. Again, all of these numbers are in millions of rupees. We have the loan book currently standing at around 1.46 lakh million rupees, a nice growth from 12 months back of 1.37 lakh million rupees. The net owned funds currently at 34,015 million, a big rise from the 27,709 million in 12 months back. The loan composition, here we have salaried and non-salaried. It seems that 52% of loans are taken by non-salaried as compared to 51.6% 12 months back, and 47.7% are taken by salaried people, which is a slight decline from 12 months back at 48.4. Then we have the mix of the loan portfolio, with 72% of the loans being home loans, while 27.6% being home equity. So home loans have declined a couple percentage points, while home equity, of course, increased from 25.7 27.6% of the total portfolio. So more home equity and less home loans, slightly speaking. Then we have profitability ratios. First, we have the net interest margin slightly increased from 5.1% 12 months back to 5.2% this quarter, which is very good. The higher this percentage, the more profitable. Then we have the spread. The spread refers to the difference between the interest paid on deposits and the interest that it receives on loans. 3.3%, a slight decline from 3.4%. Then you have return on equity, big decline from 16.3% 12 months back to now 14% return on equity. And return on assets also slipped from 3.1% to 2.9%. Return assets are now below 3%. Return equity now just standing at 14%. I guess this is because of the extremely high rise in sanctions or loans it gave out, but the what can we say net interest income and the profit didn't grow to that extent. So that's why return assets and return equity have also declined because equity and assets, that is the sanctions and disbursements, have risen so much. Moving on, we have more profitability metrics. First, the income from operations standing at 4,355 million rupees, a big rise from 4,078 million rupees seen 12 months back. Net interest income 1,914 million, 9% increase this was. Net profit increased by only 2%, 1,080 million rupees as compared to 1,054 million rupees in 12 months back, basically 12 months back. Moving on, we have operating costs. Now, this may be the reason why the profit after tax is not increasing. So first you have employee costs, which have actually declined from 291 million rupees to 278 million, but other operating expenditure has increased to 252 million, while cost to income ratio has experienced a slight increase from 23.6% to 24.3%. Moving on, we have asset quality. Basically, we're seeing the gross NPAs, that is the net performing assets, and the NNPAs, or the net non-performing assets. So here in the blue line represents the gross NPAs, and the red line represents net NPAs. As compared to June of last year, gross NPAs have declined from 4.3% to 3.3%. The lower this percentage, the better. And net NPAs have also declined from 1.7 to 1.2%. So net NPAs stand at around 1.2%. The lower this number, the better. So it seems asset quality has increased substantially, and non-performing assets are declining as a percentage of total assets. Last, not last, but one of the last things to see is I believe these are the loan book by states. Which states is received, in which states are the loans being provided? So 57% Tamil Nadu, 13% Karnataka, 10% Maharashtra, 6% Andhra Pradesh, 5% Telangana. Here we can see the exposure of the loans to the states, and we can see the annualized growth. So 8% growth annualized, or in yeah, 8% growth, okay, in Tamil Nadu, or 4% in Karnataka, very small percentage of growth in Gujarat and Kerala, 10% growth in Telangana. Telangana seems to be growing fast. Telangana is around 5% of the total. The last fact to see is profit and loss statement starting to end. So all the numbers will be more defined, and the growth numbers are given. Thank you. So first we have revenue from operations. Revenue from operations grew by 7% overall, from 4,078 million to 4,355 million. Other income decreased by 38%, leading to total income increasing by only a very small 6%. Then we have interest and other financial charges increasing by only 5%. So this is increasing at a smaller rate than revenue from operations. That's a very good sign. Employee benefit expense, we already saw, declined by 4%. Depreciation and amortization has increased by 106%. Big cost. Next, we have other expenses. This can include a bunch of things, maybe even provisions. Okay, not provisions, but this has increased by 40%. And we have provisions and write-offs. Okay, this cost has decreased by 287%. Not sure if that's the best thing, but okay. Overall profit before tax rose by 7%. And of course, here we can see the big contributor. This number, 201% increase in deferred taxes. Here we can see deferred taxes from like this 44 million to 132 million, leading to the profit after tax growing after a minute 2%. And just in case someone is wondering, deferred tax refers to the tax payments which have been transferred to the future, when they're going to be paid in the future because of some differences. These are taxes which are going to be paid in the future due to temporary differences in accounting income and taxable income, whatever. Basically, taxes supposed to be paid in the future. Current taxes decreased by 6%, but yeah, this is the perpetrator. Overall, in a summary, was it a good quarter? Disbursement saw a massive rise. which is, I guess, kind of unique for Repco. Profit after tax 2%. Net interest income grew by 9%. That's a very good thing. Spread decreased, kind of. Return equity and return assets took a hit. Maybe this is a growth phase. Maybe they will clarify all this in their transcript, their earnings conference calls transcript. So maybe there will be a highlight video, the earnings con call highlights for Repco's latest con call. So stay tuned for that. And that's it. Have a nice day.